Good morning, guys. We'll continue with our consolidation, and today we will do detailed problems in this session. To continue from the previous class, we discussed a lot of examples, and in the end I told you consolidation is nothing but line by line addition subject to computation of two things. One is computation of cost of control or goodwill, you can interchangeably use, or capital reserve, and computation of minority interest. And we did one small illustration. Let me take one last example, one or two more examples. Each example is equal to a sum, guys. When we do main sums, it is going to be exactly same as these examples, just that we are using 50, 60 for number. It will be proper lakhs or crores numbers. Let's take another example continuing from previous class. Holding limited, our example was Adidas, correct? Holding limited. This time let me change the numbers. I don't want to keep the same numbers because those numbers answer is fresh. So if you are watching this class after a long gap, ensure you revise the previous class content, otherwise it's going to be hard. Here let's keep share capital as 150. Let me keep reserves and surplus. This time what is the change in the example from previous examples? I am introducing reserves, because in all the previous examples if you see, reserves was not there. Now I am introducing reserves, basically last stage of problems, almost the last stage of sums. Reserves and surplus, keep it as 50, all other liabilities put together 200. Okay, all other liabilities is 200. Total is how much, guys? 400. This side let's keep PPE as 250. Investment in subsidiary, I will write that later. Then I will write this also later. Come to subsidiary limited. From now I am going to write subsidiary limited, two balance sheets. What are the two balance sheets? From the previous class, if you remember, we have to compute on the date of acquisition and the date of consolidation. So let's write subsidiary on date of acquisition. Why we are doing this? Because to find goodwill capital reserve, we have to compare what we paid against what we got on the date of acquisition, because that day only you can find the profit or loss, goodwill or capital reserve. So S Limited, on the day I purchased S Limited, I acquired S Limited, let's say share capital of S Limited was 50, reserves and surplus was 0, reserve and surplus is 0, other liabilities was another 50, let's say PPE was 70, current asset is 30. Are you following, guys? So total is 100. So now I will fill here. I can decide if I want capital reserve or not. First I am keeping a simple example, guys, for you to understand the context. Investments I am keeping at 50, current assets at 100, total is 400. Are you following, guys? Now I am bringing one more balance sheet of subsidiary on date of consolidation, which is 31st March, let's say 2024 we will keep. Assume H Limited also is on 31st March 2024. Assume the acquisition was on 31st March 2020. Are you following, guys? 4 years back you bought this company. We are now in 31st March 2024. Are you getting the numbers, guys? Dates. Now on the date of consolidation, of course numbers will change. Numbers will change. Let's keep share capital simple at same as 50. Correct, the same 50. I am not bringing a change into share capital. Reserves and surplus, there it was 0. Here I am going to write 20. Other liabilities will be 80. Total is 150. Here also 150. Let's say PPE is 100. Current assets is 50. That's it. Are you getting it, guys? So this is your base and this is my on the date of consolidation. Are you following, guys? Now we have to prepare the CFS. What is CFS? Consolidated financial statement of holding plus subsidiary. This is the answer. So what I told you, consolidation is nothing but line by line addition. We have to do line by line addition. Line by line addition comparing which balance sheet? This correct, and 31st March 2020 31st March 2024 2024, always 2024 on the date of consolidation. So let's do one by one. PPE will be, you will help me out, you have the numbers with you, 250 plus 100, which is 350, correct? 350. Then current assets will be 100 plus 50, which is 150. Investments also is how much, guys? 50, correct? Investments is 50, because here it's 50, here it's not there. So 50 plus 0, 50. Don't write the totals because we might have to cancel. Share capital will be, first to do the same way, line by line addition, which is 150 plus 50, okay. 100, correct? 150 plus 50 is 200. Reserves and surplus, 50 plus 20, how much? 70. Other liabilities, 200 plus 80, 280, correct? Is the balance sheet tallying, guys? Of course it has to tally. You added asset, liability, how it will not tally? That is the first step we just added. Of course this is not the final answer, we have to find cancellation. Let's say first example, I am going to slowly increase case 1, case 2, case 3. Assume in this case you have taken over 100%. So we won't have minority. Minority interest will not be there. What? Goodwill or capital reserve? Goodwill or capital reserve, we should not care about percentage at this stage. Okay. So now I have to cancel this 150 with here 50, because the share capital breakup was 150 plus 50. I have to cancel these both 50. So you will end up with 150 here, 0 here, correct? Do you have goodwill or capital reserve in this question? See and tell. Do you have goodwill or capital reserve? Goodwill or capital reserve is there, guys? No. Why no? Because we invested 50 and the value of the company on that day is also 50. For 50 you paid 50. Why will I have goodwill or capital reserve? Correct? That's it. This is the only adjustment for what, guys? For what? Consolidation here. We don't have goodwill, we don't have minority, basic sum. See, previous classes I gave only 2 balance sheets. Now I am doing the same sum with 3 balance sheets. Are you following? Now I am going to go to case 2. Let me, you can write separately if you want. I am erasing all this case 1 adjustments over here. Okay. Now what changes am I doing? What changes am I doing? Follow closely. Only one change. The investment where I paid 50, I am changing it to 60. I paid how much, guys? 60. Then automatically current assets instead of 100 will be 90. Balance sheet will tally. Correct? This is the only change I am bringing upon this question. Meaning instead of investing 50, you invested 60. Same 100% remains. No minority yet. Are you following, guys? Now what will change? Here the investment instead of 50 it will be 60 and the breakup of the share capital will be 150 plus 50, which is, now how to do my adjustments we discussed. I will cancel this 60, what I paid. For this I got only this company's share capital of 50. Still there's a difference of 10, which is goodwill. Are you following, guys? Understanding of this comparison of 60 with 50 that you are doing? Which 50 is it? This 50 on 31st March 2024 or this 50 on 31st March 2020? 31st March 2020. Are you following, guys? So my new balance sheet will now be Instead of 200, I will again write here, always this will be share capital of holding. Share capital of holding. Difference here 10, instead of investments, you will call it as goodwill. Are you understanding, guys? See, same thing, sir. This only is example 1, 2, 3, no, sir. In previous class, same. But I am now showing you with 3 balance sheets. I hope you are able to see the difference. Correct? Now coming to the next stage. Coming to the next stage. Okay, hold on. Next stage. Here, I'm going to make a statement. Tell me if it's correct or wrong. Okay. When I purchased this company, or the right words is when I acquired the company, became a subsidiary. When it became my subsidiary, the subsidiary had 0 profits. After acquisition, subsidiary has a profit of 20. That means its profit earned after I came. True or false? Yes or true or false, guys? Yes. So this profit fully belongs to holding company. Correct? Fine. Are you understanding, guys? Because I have 100%. What if I have only 90%? Then what belongs to me? Only 90%. 10% belongs to minority interest. Are you following, guys? Okay. Let me go to the next case. One more level higher. Same sum. No change, guys. Here I am not making any change. Come down. Here I am changing my share capital. Instead of 50, this is going to become 60, and my reserves instead of 20 is going to become 10. Are you following, guys? Understanding? Acquisition date I am not making any change. I am only making the change on the date of consolidation. This will be 200. First I am doing line by line addition. 150 plus 50. Investments will be 60. Current assets will be 90 plus 50, 140. This should become 140, guys. We didn't change here. Correct? Able to follow, guys? Now check if the balance sheet here is tallying. 200, 550 here also. 550. Sir, what change you did from the base example? From the base example, I made earlier already I changed investment from 50 to 60, but now I am making change in the share capital and reserves on the date of consolidation. So now when I am doing line by line addition, look at the changes that will happen, guys. Is there any change on the asset side? No. But liability side, 200 plus 80 also remains the same, but reserves will now be instead of 50 plus 20, it's going to become 50 plus 10. Reserves will be 60 and share capital will be 150 plus 60, 210, 100% acquired. Are you following, guys? Understanding? Hello? Are you following? Now this is the key, guys. This is the key, very important. Follow. Now I have to cancel. Cancel what and what? Investments will be cancelled with share capital. 60 I will cancel and I will write new share capital as 150. Is the balance sheet tallying now? 150 plus 60 plus 280, this side 350 plus 140. It will tally how much? 490. Correct? Is this correct? Is this correct? Hello? Is this correct? No. Why? Because you should have, the common mistake you are doing here is you are cancelling this investment 60 with the share capital of 60. You should not consider this, I told you. You should consider only this 50. So you should cancel only with 50 here. So this side will be, goodwill will be 10. So here share capital will remain at 160, correct? Now it's tallying, but it doesn't make sense because the share capital has to be 150. I told you, see, this 60 is included in this 150, correct? I told you in the class Anjana gave that money. See, Anjana gave me 150. With that 150 only, I am investing in subsidiary and all the subsidiary is changing. So the total available capital with me should always remain at 150. Are you following, guys? Are you understanding? Then what to do with the difference of 10? Because this side I can't cancel goodwill. This side I have a difference of 10, because if share capital becomes 150, what to do with that 10? Are you following, guys? So these are the kind of cases we are going to see. You will absolutely compare only with this. This share capital is what I want you to consider. Now the difference 10, I will tell you we have a sum with that, but to give you answer, it will be taken as a capital reserve, but I will discuss that a little later. It will be part of capital reserve. Leave that for now. This example is to ensure that you don't compare with this 60. Are you following, guys? Clear? Now, last case, let me write again. Last one case, then we can go to sums, guys. See, I am taking multiple cases. Each case, you can see that we are improving on the numbers. Let me take one last case. Are you following till here, guys? Okay. Now the next case, all the examples I took 100% takeover, correct? Now I am changing that only. Numbers are going to remain the same. I am changing the takeover to, okay, before changing takeover, let it be 100 only. I want to do one more change. Instead of reserves here being 0, let me write here at 40, 30, okay. Here now let me write share capital as 40, 10. Are you following up? That's it. This is my change. This is the next case, completely new case. Don't get confused with the previous cases. So here if you see again, holding values is share capital 150, reserves 50, other liabilities 200, here 250, 60 and 90, total is 400. Subsidiary on the date of acquisition is given over here. Date of consolidation also I have the values, okay. Now I did consolidation, which is nothing but line by line addition. Let me check. I am adding 250 with 100, I am getting 350, 60 plus 0, 60, current assets is 90 plus 50, 140. Similarly, liability side, other liabilities 200 plus 80, which is my 280. Reserves and surpluses went for a change, 50 plus 30, instead of 60 I will write 80, and then share capital will be 150 plus 40, 190. Are you following, guys? Balance sheet tallying guys, how much? 550. Are you all clear till here, everybody? Lakshita following 100%. Now we have to do cancellation, guys. I have to do cancellation. I will cancel this investment. Let me write it down because this is going to be a detailed step. Cancel what you paid. How much? 60 versus what you got. There is a different term for this. I will change in the steps. Versus what you got. I paid 60. So I am cancelling this. Cancel with what? Cancel with 40. Everybody saying 40. Anybody else different answer? 50. Kalyan and Dhaneshwar and others saying 50. Anybody else different answer? What did I get? I get this company's net assets. So basically you don't get only share capital. You get share capital along with reserves. Shareholders funds includes both of this. All the examples I gave you, reserves was 0. So you thought reserves will never be there. Hello, when you buy a company, they may have reserves. Correct? So what you get here is 70 plus 30 minus 50. So what you are getting is what? 50, which is 40 plus 10. So I got something worth 50 by paying 60. So the extra I paid is 10, which is my goodwill. So now I have to cancel 60, cancel 50 and write 10 as goodwill. Look at this. Instead of this, I will write goodwill as 10 and here I will cancel 40 and right here share capital will again come back as, and 10 I am cancelling where? Reserves I am cancelling 10 now. Here I am cancelling 10 guys. So reserves will now become 70. Are you following off? Are you getting it guys? Look at the beautiful logic of this. Logic says, hey, when you purchase the company, acquired reserves was 10. That doesn't belong to you. That is reserves which was already earned by that company. How is that yours? What is your profit? Look at this. What is your profit? Today's reserve is 30. When you acquire the company, reserve was 10. So what is the additional reserve that belongs to you? 20. That means the reserves of yours will only be 50 plus 20, which should be 70 and not 80. Are you following guys? That difference of 10 is something you paid to purchase. You bought the reserves. You never earned it. Are you getting it guys? So in computation, we are eliminating reserves. Are you following guys? Can you see the difference between this example and previous example? All the previous examples will not come in exam. Don't worry. I used one step to build up to this problem. Are you understanding guys? Are you getting it? So now when you compare, you have to compare, in other words, what you paid versus what you got, which comprises of, look at this, share capital plus reserves on the date of acquisition. So now in the previous class I gave an equation which is what you paid investment versus net assets on the date of acquisition, or it's also called share capital plus reserves on the date of acquisition. Are you following up? Everybody understanding guys? Hello? Clear? Now before I go to next example, let me give you steps for consolidation guys. Take a fresh page and write down. Trust me, any sum you follow these 5, 7, 8, 9, 10 steps. That's it. You will get the answer. Everything in the steps you may not know because some I'm yet to teach, but let's write the steps. I want to go to next example, but I want you to first refresh what we have done before I go to next example. Okay. Step 1. I am not going to write everything, but I want you to write down. Step 1. When you start a sum, you have to first identify date of consolidation and date of acquisition. You write fully, otherwise later when you see the book you will not know what is DOC, DOA. Identify date of consolidation and date of acquisition. Trust me, I am someone who doesn't like steps, but for this chapter, even though I am giving you steps, you will know the concept for every step, but in exam following these steps will save time. Like how in amalgamation when we discussed, I told you first compute PC, then accounting in books of selling company, then accounting in books of buying company. Like that here the steps have been very helpful for a lot of students. So we just made one few set of steps. Identify date of consolidation and date of acquisition. Why are you doing? Let me teach you logic when you write itself. Why are you finding these two? Date of acquisition is for which? For what purpose? To compute goodwill or capital reserve. Date of consolidation is for which day I am preparing this consolidated financial statements. So this you have to identify when you read the question. This only is first. Second, step 2, identify percentage of holding and percentage of minority interest. Are you following, guys? Identify percentage of holding and identify percentage of minority interest. We will do all sums using these steps. Then you will see how simple it is with logic. Why I am finding percentage of holding? I should know what is my share. Let's say 70%, 30%. Are you following, guys? This is the second step. Step number 3 is called analysis of profits, or in other words, write down analysis of reserves and surplus. Analysis of reserves and surplus. Now come above, keep this latest example in mind, guys. In the latest example, we had to find in this 30, how much was there on the date of acquisition, how much was later, correct? So 10 was already there, 20 is later, correct? Why I am splitting like that? Because 20 belongs to me and 10 belongs to that person, that will be considered in my goodwill computation, correct? So analysis of reserves into follow, guys, what was there before I came, what came after I came. So into pre and post. Are you following, guys? In our example, 10 was pre, 20 is post. Pre and post is what I will use, but in the book, when you write an exam, pre is capital profits, post is revenue reserve, the term they use. Pre is what, guys? Capital profits, post is revenue reserve. Are you following, guys? Everybody with me? Keep one full page, 2 sides I want, not one side, one full page to write our steps. Till here are you understanding? Okay. Now let me go back to the example, because with example only you will understand the next step. Are you following, guys? So till here what you will do when you start a sum, sir, all logic I don't care, sir. Exam, consolidation, 20 marks, I have 40 minutes or 35 minutes, how to get full marks? Follow these steps, that's it. What you will do, start off identifying date of consolidation, date of acquisition, identify the percentage. The next step you have to do is look at the reserves on both these dates and compute what was there on the date of acquisition, what came after. We call it as pre-acquisition and post-acquisition. It's pre-acquisition profits, post-acquisition profits. Next to what you have to do, guys, next step in our flow, follow. I am again changing the example, guys, using the same base. Okay, let me write down. Share capital was 40, reserves and surplus was 30, investments was 60, correct? Just check, guys, just check if this is this balance sheet tallying 150 plus 50 plus 200, 400, here also 400, here I didn't make any change, here also I didn't make any change, I am not making any change, same numbers, let us no change. So here share capital as per line by line addition will be 150 plus 40, which is 190, reserves will be 50 plus 30, 80, before I do adjustments, correct? So then what change you are doing? Instead of 100%, you are acquiring 80%, that's the change. Same question, but I am changing 80%. Are you following, guys? Understanding? Now this is the last example, promise. Once this example gets over, steps will get over, consolidation over for you guys. Now go back to what I told in the start of the class. Consolidation is nothing but line by line addition. Again repeat loudly, recording students, don't look at my face. Consolidation is nothing but line by line addition. That's what I did here. line by line, line by line, line by line, 190, line by line, 80, 50 plus 30, line by line, 280, 200 plus 80, line by line, subject to two things I told you, computation of goodwill or capital reserve, cost of control or capital reserve, and computation of minority. So first we are doing computation of goodwill or capital reserve. Sir, which one to do first? Doesn't matter. So to do both, you need to do some workings. Okay. So first, since you know to compute goodwill, let us do goodwill computation, which you all already know. We did in the previous case. So investments will become goodwill as 10. Share capital will remain at 150. Then what we did? What we did, guys? Let me write that again. Okay. So how did we compare? Remember this computation, guys. 60 we compared with 50. We cancel and wrote goodwill as 10. So here I will write goodwill as 10. I will write share capital as 150 and reserves and surplus was 70, and that's it. Anything else came? See if it's tallying. Tallying on both sides. Hello? Tallying, guys. This is what we did earlier. Hello? We did earlier. Are you following, guys? Clear? Now, follow. This is computation of goodwill. But this is correct if I have taken 100%. But 100% doesn't belong to me. Now, what belongs to me is only 80%. Do you remember, guys? What belongs to me is only 80%. That means in the minority interest, remember 80% belongs to me. So 20% belongs to the minority outsiders. That means out of the total subsidiary companies value, what is minority? 20%. So remember the illustration 1 what we did. For computing minority interest, it was 20% on which day? On date of consolidation. Remember this sum, guys. Consolidation. Which page this? So if you remember our illustrations, this 23. Go to illustration 1. You remember this, guys, this sum? Illustration 1 for computing minority. We discussed in the last class, minority should always be on the date of consolidation, because what belongs to minority? What belongs to minority is what is available with the minority on this day. So on this day, what is my net assets, sir? 70, correct? Or 100 plus 50 minus 80. 150 minus 80 is how much? 70. In that 70, what belongs to them 20% is 14. You remember doing this, guys? We did for this 20%, for this 20%, for this 20%. If you minus, you will get 14, correct? So if you come down here in this example, I will write minority interest will be 14. So out of the reserves and surplus of total 70, which I thought fully belongs to me, how much belongs to minority? 14. So what will belong to me is 56. Are you following up? Are you understanding, guys? So you have to compute minorities share. How do we compute that is going to be my next step. So step number 4. Don't worry, when we do a sum, one sum with all steps, you will get full clarity, guys. I know now you are understanding concepts, but each adjustment you are understanding. When we do everything together, you will get full clarity. Step 4. Write down computation of minority interest. Are you following, guys? Computation of minority interest. This how do you compute? Two ways to compute. Net assets on date of consolidation into minority percentage, or share capital plus reserves and surplus into minority interest percentage. Are you following, guys? Everybody with me? There is still one more small catch over here. If goodwill comes, this will slightly change, because this reserves is full reserves, correct? You leave that. This reserves on which day? On date of consolidation, correct? So in other words, can I write this? Can I write this as share capital on date of consolidation, correct? Date of consolidation into minority interest percentage. Reserves and surplus, I am splitting into two. Reserves and surplus on date of acquisition into minority percent. Reserves and surplus on date of consolidation minus acquisition into minority interest percent. Are you following up? Sir, why sir you are doing three things? All three are the same. Look at this. Net assets on the date of consolidation into minority interest percentage is one method in some sums. In some sums I will do share capital plus reserves and surplus on date of consolidation into minority interest. This reserves and surplus in our example was 30. I am splitting this 30 as 10, 20. Are you following, guys? Are you understanding? In the 10, what belongs to me is 20%. In the 20 also, what belongs to me is 20%, correct? So reserves and surplus on date of acquisition into minority interest rate, or reserves and surplus on date of consolidation minus date of acquisition into minority interest. When we do sums, you will get clarity, guys. Should I do all the three methods? No. Any one, when we do sum, you will understand better. Are you following? Just write it down for now in your steps. This is step number 4. Whether you use this or this, answer should be the same. Are you understanding, guys? Next step 6 of 5. Computation of cost of control. Computation of cost of control. Are you all with me, guys? Hello. Computation of cost of control. Prepare a table like this. Particulars amount. We will finish the steps and straight away get to sums. Particulars amount. Here A you write down. Net assets on the date of which day, guys? On the date of acquisition only you compare, correct? For cost of control only I told the whole thing, you will take date of acquisition. Date of acquisition represented by holdings share of, represented by holdings share of share capital on the date of acquisition plus reserves, nothing but pre on the date of acquisition. Are you following, guys? I'll explain. Write down first. Net assets on the date of acquisition represented by holding company share of share capital on the date of acquisition, reserves on the date of acquisition. Sir, what is this, sir? You already know, I gave English. Come up. Did you understand how this 50 came? Now I'll replace what you paid versus what you got. What I got was 40 plus 10 now. Now come here. What I got is share capital on the date of acquisition. Our example 40, reserves on date of acquisition. Our example 10. This is that 50. Are you following up? Are you understanding, guys? I replace that number with equation. Are you getting it? Now are you getting the logic? When you write, you will have some confusion. Clear? Net assets. This is nothing but, in simple words, what I got. Are you following, guys? Next will be what you paid. So below you write down B, cost of investment. Correct? What I paid is how much, guys? 60. Below this cost of investment, please leave 2 lines gap. Exactly 2 lines. I will fill that later. I don't want to confuse you. Just fill it later. Cost of investment 60. So C will be goodwill or capital reserve. Don't do minus. There is a formula, but simple. What you got was 50. What you paid is 60. So you paid more. So it's going to be goodwill 10. Correct? Are you following, guys? Book has a formula. 1 minus 2. Positive means capital reserve. Negative means goodwill. No. They are saying 50 minus 60. Negative 10 goodwill. 50 minus, let's say, 40. Positive 10 capital reserve. Don't get confused. You know the logic. Correct? What I got is 50. What I paid is 60. I paid 10 more. So it is goodwill. This is computation of cost of control or goodwill. Are you following, guys? This is step number 5. Let's go to next step. Step number 6. Step number 6. Computation of reserves and surplus for the holding company's consolidated financial statement. Computation of reserves and surplus for holding companies. Reserves and surplus. Correct? Sir, what is this, sir? Come to our example. In our example, the final reserves in the balance sheet was not this case. Earlier, it was 70. Correct? How did that 70 come? 50 plus 20. What is 20? 30 minus 10. So in other words, can I say 20 is post acquisition profits? Correct? So come here now, write down. Basically, I want to write here 50 plus 20. That's all. But my English will be 1. So what is 50? Reserves of holding company. So reserves of holding company. Copy paste plus post acquisition reserves and surplus of which company, guys? Subsidiary company. Our example, it was 20. So we got answer as 70, but you write one more 3 here and write down any others. Sometimes others will come. Lot of adjustments will come. Write down others. Are you following, guys? Hello? Okay. Done. Computation of reserve and surplus for the purpose of holding company. You will do all of this. Clear? Next, leave enough space to write one more step. Basically, I need one more side of space you have to leave to draw one balance sheet template. Now let's go to a sum. Do steps till here, then again come back and fill the steps and then proceed. Are you following, guys? Let's go to illustration number. One full-fledged sum I am going to do, guys. Follow guys, 1 second. I'm just thinking with some to start off, which will be not difficult for you. Perfect. Illustration number 10. Even though you know consolidation, trust me, they have added, even though if you know consolidation of subsidiary already, compare old syllabus study mat and this study mat, there are a lot of new sums in this chapter itself, and every chapter we already discussed. I'm repeating so many times. Your initial few attempts in new syllabus is going to be the attempt to score. Last old syllabus they gave pass percentage less. Take history guys, take the last 5 times when CA new syllabus came. Every time new syllabus comes, the first 2-3 exams, or at least the first 2 exams, pass percentage will be high. Go check May 2018 pass percentage. Go check before that. Why pass percentage will be high? ICA wants to first make an affirmation that this is the correct syllabus, the change we did is correct. So for that, previous syllabus should be lesser. So our November 23, the last one in old syllabus, percentage was comparatively less. Did you notice or not guys? Hello? It was 9%, it was less. That means new syllabus, whatever is going to come, will be 2024, both the attempts of 2024 and maybe even 2025 May, or at least 2024 both will be high pass percentage. That's not because ICA is making everyone pass, because the questions are fairly expected. I can guarantee you that 100 marks will come from study mat, because there are 100 new questions. They have added almost 100 new questions. Okay, so now illustration 10, go through illustration 10 guys, read the question. Fine, read illustration 10. For you it's illustration 10, book also same, huh? Hello? 9, 10 only. Book, study mat book for you guys also 10 for everybody. No, in the book you have, what is it? 9, that's why I'm asking. For some of you it's illustration 10, some of you with a different book will have illustration 9. Okay. Look at the question guys. HNS Limited, PPE 5 lakhs and 2 lakhs, investments 20,000 shares of S Limited 2 lakh 20. Trust me, consolidation we will spend easily 25 hours guys. It's a huge topic. The initial few hours are very important guys. This sum is going to be a maker or breaker of what you learned in the last 3 hours. Investment is what is cost of investment. Current assets they have given. Share capital they have given. Profit and loss, trade payables. H acquire the shares of S. That's it. Simple sum. I want to know, is the balance sheet tallying here first? This is assets, this is liabilities. Quickly check that, go through the question. Is it tallying, guys? Okay, sorry, online recording. If you are searching where I went, I should have told you. Just went out for quick work. Okay. Tallying, what's the balance sheet total? 8 lakh 70. Fine, 8 lakh 75,000. Now we will apply our steps, guys. One by one, let's go with steps. That's it. This is consolidation on which day? 31st March. They have not given any other data, so let's do it quickly. First, step 1. I will go with this, what I wrote here itself. Step 1. Identification of date of consolidation and date of. Is that given in the question? Only we have date of. No. No, date of consolidation is 31st March. Date of acquisition, they have. Both are same day. Simple sum. So both are same day. That means you don't have different balance sheets. So both are 31st March 2021. Are you following, guys? Clear? You will write that down. Next, identify percentage of holding and minority interest. Here I purchased 20,000 shares of S. S has how many shares? Compute. S has 2 lakh 50 divided by 10. They have 25,000 shares. In that I have 20,000. Are you following up? So what's the percentage? 80 is holding, 20 is. So I will change this. 80%, 20%. Are you following up? Easy or difficult, guys? Hello. Next, analysis of reserves into pre and post. Whose reserves should I analyze? Subsidiary. In this question, have they given reserves? Yes. How much the reserve? 1 lakh. Correct. Now I am going to write here. Whatever reserve is there, you have to analyze all the reserves. Fortunately, in this question, we have only P&L. If they have P&L, revaluation, capital, everything I have to analyze. Okay. So here profit and loss was 1 lakh. This is on the coincident. This analysis should happen generally on the date of consolidation. Only we have to split. Here, can you tell me how much is pre, how much is post? Full 1 lakh is pre, post is 0 because I am yet to find post. This is the date of acquisition. That means on this day, whatever you acquired fully is capital profits. Correct? Pre-acquisition. That means you paid to get this. This is not your profits. You purchased these profits. Are you following, guys? See, let's say Reliance is going and buying Dunzo. Dunzo is saying I have a profit of 2 crores. I am buying Dunzo along with that profit. That means I didn't earn it. I purchased your profit. So it becomes a capital profit for me. That's why we call it pre-acquisition. Are you following, guys? So now in this pre-acquisition, how much belongs to me? How much? So let me write the steps again. Step 1, date of acquisition 31st March 2021. You need to write this in the solution. You can't keep in mind. You have to write that. Next, percentage. H is 80%, sorry, and minority interest is 20%. Next step 1 we did. In exam, you don't have to write step 1, step 2. You can write working note 1, working note 2, working note 3. Next time, computing profits analysis, where 1 lakh is pre, 0 is post. Now, once you analyze the profits as pre and post, within the same step number 3, I call it as substep 3A. We call it as substep 3A, splitting this profits, how much is for holding, how much is for minority. In this pre of 1 lakh, what is for holding? 80,000, 80%. What is for minority? 20,000. Are you following this up? I call this as substep 3A. Once you find what is pre and post, in that pre, how much is holding, how much minority, how much is in that post here, since it's 0, we don't split. How much is holding, how much is minority. Are you following up? Clear, guys? I call it substep 3A. basically splitting my pre and post for holding an minority. Are you understanding till here, everybody? Next, step number 4 is what? Computation of minority interest. Careful guys, computation of minority interest. There are many ways to do it. Now look at this. One way is find out net assets, which is nothing but share capital plus reserves into minority interest rate. So 2,50,000 plus 1,50,000, how much? 2,50,000 plus 1,00,000, so which is how much? 3,50,000 into 20%, which is correct? Hello, are you following guys? Or I also told you share capital plus pre of minority share, basically pre plus post into minority share. This also I gave equation now. So here share capital was how much guys? 2,50,000 plus what is the pre? 1,00,000 into 20%, how much? Same answer. Are you following? Now are you getting the step logic guys? See, this is what you are going to do basically. But we can split as pre and post. How much of pre is mine? How much of post is mine? In this sum, post is 0. If post is there also, you will take that value. Are you getting guys? So minority is how much guys? 70,000. I hope you are writing. Keep it in mind. So minority is 70,000. This is step number 4. Step number 5. Computation of goodwill or capital reserve. What I paid versus what I got. Correct? What I paid in this question? 2,20,000. So I will write. I am sharing directly answer guys. 2,20,000 is my cost of investments against what I got. What is the net asset on the date of acquisition? Net assets 3,50,000. Correct? But go to the step and read the English carefully. Read the English carefully. Net assets on the date of acquisition represented by holding share. I can't take fully. What is holding share? 80%. Therefore, minus 3,50,000 into 80%. How much you are getting? 2,20,000 minus 2,80,000. So for something worth 2,80,000, you are paying 2,20,000 only. So balance 60,000 is capital reserve. Are you following up? Everybody following guys? Hello? Now I have to go and prepare the balance sheet. So till here, ensure you have the steps you have understood till here guys. See, will the sum come in exam? Chanceless. Okay, I am just giving you, we are starting off, look at this, look at the sum again. Where did I start writing guys? Step 1, where is that? Oh, step 1, date of acquisition. From here I found acquisition, I found percentage, then reserves I computed as pre and post. In that pre, how much is holding, how much minority, understanding logic for every step. And step 4, I am finding out minority interest. Step 5, I computed goodwill or, now I have to prepare balance sheet. I have to prepare balance sheet guys. Keep this as hold. I wanted to write all these numbers, or let's prepare the balance sheet now itself guys. Let me do in T format first. Let me do in T format first for you to understand, because every sum I don't have to do cancellation. Look at this. Line by line, I told you consolidation is nothing but line by line subject to computation of goodwill or capital reserve and computation of. In this sum I computed minority, I computed capital reserve. Apart from that, everything else is line by line. So look at this. Let's come one by one. Let's finish assets. PPE 5 lakh plus 3 lakh. So here I will write PPE how much? 8 lakhs. Guys, are you following guys? Next, investments 2,20,000. But the 2,20,000 only we already knocked off. Where we knocked off? Here, which was replaced by capital reserve of 60. So I will write here capital reserve 60, no need to write investments. That, see, in all the examples I did set off after addition, but this set off only I did in the previous step. This only is set off, correct? See, investment is set off with share capital, I have the balance as 60. Or if you want to write in detail also, let me show you. If you want to do it the way you want to do it, investments will be 2,20,000. Let me do line by line addition for your satisfaction because you learned that way. Next, the current assets is 1,55,000 plus 1 lakh. How much? 2,55,000. Come this side. Share capital. Line by line. First, 5 lakh plus 2,50,000, which is 7,50,000. Then we have P&L. 3 lakhs, correct? 2 lakh plus 1 lakh. Trade payables 1,75,000 plus 50. How much? 2,25,000. Is the balance sheet tallying? Yes. Now every sum don't do it like this. Okay, every sum we have to, that's why we have working note above. What the working note told, if I cancel my investment with P&L of how much? No, this whole together is cut off only with 2,80,000, correct? So that means if I have to break it down further, it's 2,50,000 plus 1 lakh into 80%, correct? What is 2,50,000 into 80%? 2 lakhs, and this is 80. That's how I got 2,80,000. So cumulatively, I will reduce from both of this, from 7,50,000 I have to reduce what, guys? 2 lakhs, and from this I have to reduce 80, correct? So instead of doing all of this, I will simply write like, that's why I did working note, instead of doing all of this, which gets confusing here, sir, where to reduce. That's why I did working note above. So what I will write, I told you share capital should always be share capital of holding. What is the holding share capital? How much, guys? 5 lakhs. I will write share capital as 5 lakhs. And then I will write capital reserve, which you computed as 60,000. You computed above. And you computed minority to be how much? 70,000, correct? So I will write minority interest as 70,000 plus I need to write profit and loss of which company? Holding company, correct? This P&L 2 lakhs. How much we get? 2 lakhs. Now check if the balance sheet is tallying. This investment will go away. Check if it's tallying, guys. How much? 10,55,000, 10,55,000. Sir, I am not able to understand how it tallied. Basically, that knocking off that we do here, I did in the steps above. But if you want to see it over here, the change is happening only here, correct? Investments of 2 lakhs is being replaced with the change here. So if you want to see in detail actually what is happening, look at this. Share capital was 7 lakhs, 8 lakhs. If I do line by line addition, share capital is 8 and reserves and surplus is 2 plus 1, 3, correct? So this what I am doing, from this 8 lakhs, I reduced first that I am doing two computation, I am reducing that, which one? 7,50,000. Share capital is 7,50,000. From this, basically I am removing whatever was considered cumulatively, guys. Cumulatively, totally comes to how much? 10,50,000. From this, I am reducing this 2,80,000 which was considered, for cost of control, and I am reducing minority. What I considered how much, guys? 70,000. If I reduce both of this from 10 lakh 50, I am reducing cost of control, cancelled, reducing minority. You will have left off with how much? 7 lakhs. That 7 lakhs is including this capital reserve, which is represented over here. If you add, not this, if you add 5 lakh plus 60 plus 70, how much you are getting? 6 lakh 30,000. No, this is the total share capital. I am eliminating this full 2 lakh 80 and minority 3 lakh 15 and 20%. Yeah, how much you get? This 2 lakh also is there. Add this 2 lakhs. Now how much you are getting? 8 lakh. 5 lakh plus 60 plus 70 plus 2. You get 8 lakh 30,000. Here you are getting 10 lakh 50 minus 2 lakh 80 minus 70. You are getting 7 lakhs. There is a difference of something we missed over there. No, 1 lakh 30 should is. This is tallying. Did you check, guys? This is tallying. You understood this part? Okay. This reconciliation we will do it. We will do it. Hold on. This you understood, guys. How to add? Replace investment, share capital of holding only, capital reserve, minority and P&L of holding. This you got it, guys. Okay. With that, sum is over. Let's go check. You got total of 10 lakh 55. That's it. 10 lakh 55. You can see the breakup here. Capital reserve we also got 60. Minority is 70,000. Are you following, guys? We will come back to that in a different sum. That same computation what they did fully, sum comes to an end. That's it. Okay. Now go to your steps. Go to your steps. Last is step number 6 you wrote. Please ensure you write step number 3A also. Step number 3A. Step 3A. What is step 3A? Splitting of pre and post for holding and minority. Splitting of pre and post for holding and minority. Okay. Step 3A will be splitting pre and post for holding and minority interest. Are you following, guys? Next will be step number 6 only we finished. No. Step number 7. 7 you write down. Adjustment. This I will teach you when a sum comes. Adjustments for intercompany. Adjustments for intercompany. What is adjustments for intercompany? Can someone tell me? Same thing in amalgamation. Transaction between holding and subsidiary. If holding has trade receivables 100 and if subsidiary has trade payables 100, I will strike both. Instead of showing trade receivables, trade payables. Are you following? That's called adjustment for intercompany. That's it. Now you write down step 8, which is my consolidated balance sheet. Prepare balance sheet template in vertical format first and write down in the same order that we are going to do. Prepare one rough vertical format how the balance sheet should look. We have to prepare only in schedule 3. First will be what, guys? Share capital. Now follow very carefully. Share capital is whose share capital? Right here, H only. Correct? In amount column, don't write amount. I am giving you template. H only. Correct? Hello? Next item 2 is reserves and surplus. Correct? I will write here step 6. Are you following, guys? Trust me, consolidated balance sheet should take less than 20 seconds if all your steps are correct. Reserves and surplus is step number 6. Go back to step 6. What is step 6, sir? Read in your notebook. Computation of reserves and surplus for the purpose of For holding companies, consolidated. So that answer only will come here. Are you following, guys? Next, item 3, minority interest. Minority interest. Which step? Copy paste from step 4. Correct? Are you understanding, guys? Hello? Next, rest everything else, guys. Other liabilities. I am just writing in simple. It includes current, non-current, long-term borrowing, short-term borrowing, trade payable, this, that, everything. Everything else. It is what plus what? H plus S minus step 7. If any, correct? H plus S minus step 7. Intercompany. Are you following, guys? Easy. This will be total. This will be total. Create the template, guys. Create the template. Below, come down to asset side. PPE, or in other words, write down all non-current assets. What plus what? H plus S. Anything else? Minus step 7. What if there is intercompany? Who knows? It may be there. Usually it's never there, but very rare circumstance. H plus S. Next, current assets. Same. What is it? H plus S minus step 7. Are you following, guys? Clear? Everybody understanding? Next, between PP and current assets, write down goodwill if there. Correct? Not always. If goodwill is there, correct? Which step? Step 5. Correct? Hello? Step number 5. Are you following, guys? Today we are going to do a proper sum, guys. Step number 5. Are you all understanding? Clear, guys? So total will come. That's it. This is your consolidated balance sheet. So I have made it so simple with the previous steps that when you prepare consolidation, it's just a copy paste of all the values. Below the balance sheet, write down note. Write down note. Consolidation is nothing but, write down, consolidation, note 1, we have 2 notes, note 1, consolidation is nothing but line by line addition. Consolidation is nothing but line by line addition subject to under that 3 subpoints. Consolidation is nothing but line by line addition subject to, under that how many subpoints, guys? 3 subpoints. 1, what is that? Computation of cost of control or capital reserve. 3 subpoints, guys. Under the 3 subpoints A, B, C. One is computation of cost of control or capital reserve. Second is computation of minority interest, and last one intercompany adjustments, which is my step 7. Correct? Intercompany adjustments. Consolidation is nothing but line by line addition subject to computation of 3 things: cost of control, minority and intercompany. Are you following? Look at the balance sheet. Not only we are doing, except line by line, everything else is these 3. So if these 3 is correct for you and if you understand it conceptually, it's rich in concept. If you understand, consolidation is over. Are you following? Write down note number 2. Note number 2. Note 2. Write down note 2. In the consolidated financial statements, note 2, separate note. In the consolidated financial statements, for the purpose of share capital, we should take share capital of, for the purpose of consolidated financial statement, what did I say? For the purpose of share capital, we should take only share capital of holding only. We should take share capital of holding only. However, we should take share capital of holding only. However, if I take holding plus subsidiary, I will GPay, write down. If I take holding plus subsidiary, I will GPay rupees 5,000 rupees to Karthik sir, write down. I will GPay rupees 5,000 rupees for every mistake to Karthik sir. Write that down everybody guys. Okay. Now bracket. Open challenge that you will make this mistake in the class. Write down. Open challenge. Everybody write recording also. Open challenge. We have not done any sum except one open challenge that I will make this mistake in the class. Okay, done guys. Today you will not in this session, but I will guarantee you in the coming classes, we will make this mistake. Wait for it to come. That's it. Notes are done. Now we are going to straight away go and do sums. Okay. I hope all of you have my GPay number. You have to promise send. If you want, remove 10. At least 500 rupees you have to send guys. If not 5,000. Okay. Okay. Done guys. Hey, in this note don't write an exam. There's one student. In results there's something called UFM. Unfair means. One student in foundation or somewhere, result was withheld. They didn't give the result. Not this attempt. Few attempts back. Reason he wrote, this is my GPay number, make me pass. In the answer sheet he wrote, somewhere in the middle, gone. I don't know what happened after that. One student wrote in CA final, answer in blue pen. You should write only in black. Result was withheld because he used blue pen. Then one student wrote in the answer sheet, Hare Krishna, Hare Rama. He wrote big slogan, gone. Result is withheld. ICA doesn't care about religion except your answer. No slogan should be there. Are you following guys? Understanding? Clear? No signs, nothing. Sir, I know sir, my friend is correcting paper. He's saying, if you write in this center, I will get the paper. So he wants to find out my answer sheet. So give one code word. UFM will be the code word ICA will give you. Unfair means. Okay. Illustration 11, that's it guys. Now next to 1 hour, quickly we will do sums. That's it. Illustration 11, simple sum. Look, I want you to do with the steps guys. Look at sum number 11. H and S Limited provide the following information: PPE, investments, current assets, share capital, P&L, trade payables. Super. Additional information: H Limited acquire the shares of S Limited on 1/7. Oh, you are expecting all sums to be same, huh? No. Here date of acquisition is different from date of consolidation, and the balance of profit and loss account on that day was 30,000. Prepare consolidated balance sheet as on 31st March 2022. What's the difference between this sum and previous sum? Date of acquisition and date of consolidation is different. Start with the steps guys. Now each sum should take only 5 to 10 minutes. Start with the steps. See, consolidation all, there are 25 sums. Don't expect me to do all 25 sums in class. I will teach you how to do it and then you will start doing it guys. Step 1, I will do the key working notes. Everybody write with me guys, or at least write when I repeat. Step 1, fill it. Write down date of acquisition, date of consolidation. Date of acquisition and date of consolidation. Write down fast. What is the date? You have to write in notebook. Date of consolidation 31st March 2022. Date of acquisition, what is it? 1st July 2021. Write in the notebook. Don't look at my face and tell it's there in question paper. Second, you have to do it guys. I have done almost 10 examples now. Done guys. I will do the key working notes. Don't worry. I will do the key working notes. Step 2, what you will write notebook. Don't look at me. Write down, guys. Percentage of holding and percentage of minority interest. Can you compute it? You have to compute. I want you to try it out. How much? I am getting the answer 80:20, which is absolutely correct. How did you do, guys? I purchased 8,000 shares of S Limited. S has 1 lakh. So I have 8,000 divided by 10,000, 80%. That's it. Percentages 80%. If holding is 80, minority is 20. Show the workings. Show how 80 came. 8,000 divided by 10,000 is equal to 80%. Are you following, guys? How 10,000 came? 1 lakh divided by 10. That is not the notebook, loose marks. Are you following? How many of you wrote 8,000 divided by 10,000, 80%? How many of you also wrote how that 10,000 came? Didn't write? Gone. Because exam will ask one question. How did you write 10,000? Sir, very easy, sir. Basic. 1 lakh divided by 10 is 10,000. Person correcting is not an accounts faculty. Imagine chemistry teacher is correcting your paper. Will they understand accounts? They will search in the key that the key has 8,000 divided by 10,000. 10,000 is 1 lakh divided by 10, therefore 80%. They will look at your answer. You wrote 10,000. You didn't write steps. Step mark gone. Are you following, guys? It is possible to get 100 out of 100 accounts. But all these things matter. So percentage is 80 by 80 is to 20. Done, guys. Next step only is key. Analysis of reserves and surplus. This I will do. We will do it together. We will do it together. For analysis of reserves, first you should start off with each reserve available in the question. In this question, what's the reserve? Only one reserve. Which one to take? There are 3 reserve values, guys. You pick. There is 50,000, there is 40,000, there is 30,000 below in the note. Correct? Which one to take?
40,000 and 30,000.
I have to take 40 because I have to analyze what is the reserve from the date of consolidation. So date of consolidation of whose reserve? Subsidiary. Never do analysis for holding. No use. So subsidiary is how much, guys? 40,000 on which day? 2022, which is my date of consolidation. Now this I have to split as what was pre, what was post. In question he itself gave. Correct? Look at this. Balance of profit and loss account on that 1st April. Look at this. On 1st April was 30,000. Are you following, guys? It's not 1st July. So if I put a timeline, just tell me if this is correct. Okay. 1st April 2021 was 30,000. Are you following, guys? 1st July 21 acquisition took place and I am preparing balance sheet on 31st March 22 when my reserves was 40,000. Is this correct? Did you understand this, everybody? In every sum, if this step goes wrong, forget about consolidation. Full zero you will get. It's like in amalgamation. PC goes wrong, sum is gone. Whatever you do. So this is that step. Splitting into pre and post is the heart of every consolidation sum. If you get that wrong, every other step I don't care. You might get half mark. Sir, I did trade payables, holding plus subsidiary. Okay, half mark. So now look at this. What is post in this? This fully is post. Correct? This fully is pre. But I don't know how much is pre and post because they have not directly given. They just told me opening it is 30. That means this 30 is anyway before 1st July. So can I say full 30 is pre? Full 30 is pre. But during the year 30 became 40. That means there is a plus 10,000 which was earned during the year, how much is pre, how much is post? They have not given any details. So you will assume that the profits were earned evenly during the year, and I will split into this. How many months is there? April, May, June. 3 months. Here how many months? 9 months. I will split in the ratio of 3:9 using time ratio. Are you following, guys? How much you will get? 2000. Correct? 10,000 into 3 by 12. How much? 2,500. Here 7,500. Are you following? Hello? So that means, look at this. I am going to write like this. We will prepare a chart, guys. I like the chart method, which is very effective. 40,000 is the closing balance. Correct? In that, opening balance is how much? 30,000, which is fully pre. Fully pre. Balance current year is this 10,000. Again I will split into 2,000, 7,000. This also is pre. 7,500 is post. That's it. Are you following? Are you understanding, guys? Vishnu, following? Hello? We are now entering actual sums, guys. The last whatever time we spent is to understand why consolidation. I can have directly done this. Are you genuinely understanding the logic of this? This is step 3. Now follow. No, this is only step 3. This is only step 3. Like this you have to do for every single reserve. Thankfully this sum has only P&L. What if sum has P&L, general reserve, capital reserve, revaluation reserve? You have to do it for all the 4. Like this you have to split as pre and post. Do we have sums like that? Yes. I told there are 25 sums. This is the second sum as per book. Okay. Following, guys. Now step number 3A. No, not 4. 3A. Analysis of pre and post. This step we are doing it for the first time, so allow me to do it. This I hope all of you copied, guys. Sir, how can you take assumption it's earned evenly? No other data given, so I will do like that. Those who studied group 1 earlier will know there was a chapter called pre and post incorporation, time ratio, sales ratio. If that chapter, if you learnt in group 1, this would have become easier. But new syllabus, they removed that. So this is the first time you are learning what is pre and post, time ratio, what is it? Are you following, guys? Okay. Now, come back. 3A. Okay. I am going to write, look at this. I am going to prepare a table. You tell me if you are understanding it or not. Particulars, pre, post, HS share, minority interest share. I am preparing one nice table first. Okay. Total, or in other words, total pre. Okay, let me do it this way then. Let me do it the other way. Particulars, HS share, minority interest share. Are you following, guys? Okay. Now, what is the out of the share capital of the company? Whose share capital? Subsidiaries. What is the subsidiary share capital? 1 lakh. Correct. Total is 1 second. Yeah, total is 1 lakh. Correct. In this 1 lakh, what is HS share? 80%. What is M share? So write down here 80,000, 20,000. Are you following, guys? Maybe you can write one more column called total and write the amount over there, 1 lakh. Second, are you following, guys? I'll tell you why this table is going to be useful. Follow. It's going to be, this is going to be your heart, like this, the whole computation. Look at this. Next, total pre. What was the total pre you computed above? 30,000 plus 2,500. So total comes to 32,500. Out of this 32,500, what is HS share? 80%. How much? 26,000 flat. Here 500. So follow very carefully. You have to wait till I finish this whole sum. Total post we computed above how much? 7,500. How much? 6,000, 1,500. Now this is the table that I want you to prepare. Something like this, guys. Of course, mine is not neater. You do it neatly. Okay. Numbers, if you understand, means it's enough. Okay. Important table. Please make a note. Please make a note. Okay. Make it nice, spacious table. Make it nice, spacious table. Okay. Now, leave one line gap or two lines gap. This is step number 3A. That's why I gave separately one 3A. It's a key step. This 3A is the magical step in consolidation. ICAI study mat does not do it like this. They do it in a more detailed way. Ours is a crisp and short way to save a lot of time. Now this is your 3A, the heart or the magical step. Now proceed. Sir, why we did this? Wait for it. Wait for it. Proceed to next step. Leave that step. You understood the numbers here. But what is going to be the use with these numbers? Wait for it. Go to next step. Step 4. Computation of minority interest. You compute in the way you know. What is minority interest? Share capital plus reserves and surplus into 20%. Correct? What is share capital plus? What is share capital in the question? 1 lakh. What is reserves and surplus? 40,000. Correct? So 1 lakh plus 40,000 into 20%. How much? How much? 28,000. Are you following? Everybody understood this? Everybody understood this? Now go to this table. Add these three. How much you are getting? 28,000. Are you following, guys? Are you following? So take a pencil. This total, you do this total. You prepare a total also here. Total does not make sense for all the columns, but still you prepare a total. Here you get 28,000. Total will not make sense for the whole table, but here it is how much? 28,000. In pencil you write down this 28,000 is equal to step 4. Are you following up? Correct? Is equal to step 4 minority. That means I don't have to do this. You can do this for cross checking. The answer is already there in this table. Are you following up? Now you will get clarity. Basically what you did, sir, I am not understanding. I expanded this formula equation. Share capital into 20% is 20,000. Reserves I split into pre and post. This pre and post I did into 20% and got this. Are you following, guys? Sir, why are you doing this additional step? Not additional. Anyway, you have to compute pre and post. So why not use that to find 28,000 instead of doing this additional working? Are you getting it, guys? Next, step number 5. Step number 5, which is computation of cost of control or capital reserve. Are you following, guys? Okay. Now you tell me, guys. This is nothing but what I paid versus what I paid versus what I got. Just hold on, it will come. Just hold on, guys. Online, small loose connection. It should have come back now. Done. Okay. Recording students, I am not editing all that, guys. Fine. Some loose connection. Okay. Now come back. Cost of control or capital reserve. What you paid versus what you got. Let's do the computation. What you paid. How much you paid, guys? How much I paid? Investments is 1,26,000. So come here. What I paid is 1,26,000. Simple. Compare with what I got. What you got is what? Net assets on the date of acquisition. On the date of acquisition into holding companies share. But we don't have that balance sheet here. Do you have the balance sheet? See, this is what balance sheet? Balance sheet on which day? 31st March 2022, which is on the date of consolidation. Can I take the values of this and multiply with 80%? No. It doesn't make sense, correct? That means I need to know what is the value on the date of acquisition. So let's look at the question and try to understand, which is nothing but asset minus liability is share capital plus reserves and surplus, correct? So share capital, thankfully, if it's the same, but reserves is not 40,000. What reserves should you take? You should take reserves on the date of acquisition. That only we computed as pre. So can I say share capital plus pre-acquisition reserves? Now read your notes in step number 5. What did I say? Net assets of holding represented by holding share of share capital and reserves on date of. That is nothing but pre. Correct? Read the step 5. Go to step 5 and read. Holding company share of share capital plus reserves on the date of acquisition, which is nothing but pre. So share capital in this question is 1 lakh plus what is the total pre? 32 500, but I can't take full 1 lakh because what is my share of 1 lakh? So I will take only 80,000, correct? What is 80 plus 32 500? 1 lakh 12,000. For something worth 1 lakh 12,500, you paid 1 lakh 26. So extra is how much, guys? 13, which is my goodwill. Sir, I am not able to understand. Let me explain again. 32,500. No, hold on. 32,500 is total pre. But this total pre for me? No. Read the wordings, guys. Read the wordings again. Net assets represented by holdings share of share capital plus reserves on date of acquisition, which is pre, correct? So share capital will be how much, guys? 1 lakh into holding share 80%, 80,000, and what is that? 32 500 is the total pre, but what is my share? 80%. How much? 26,000. So you got only 1 lakh 6,000. You did not get 1 lakh 12. Are you following? How many of you are getting the logic, guys? How many of you thought this is wrong, sir, before itself? Good. I did it intentionally because I wanted you to think, how can it not, everything is not correct what I am doing. Are you following, guys? So this is correct. Are you getting the logic? So for 1 lakh 6, you paid how much? 1 lakh 26. Therefore, goodwill is 20,000. Are you following, guys? This is your computation. Now, sir, I should do this again, sir. 80 plus 26. I told you we have a magic step. Which is that? 3A. Go to the magic step. 3A. See here. 80 plus 26. It's already there in our table. Correct? 80 plus 26, which is nothing but in H's share capital column of H share and pre column of H share. So do a small help for me. Shade both of this or put a circle between both of that alone in pencil. In pencil, put a circle. In pencil, put a small circle, guys. Put one arrow mark outside the table. It is going to which step? Step 5. Are you following, guys? This one table is helping me compute minority, helping me compute goodwill or capital reserve. Are you following, guys? Understanding? That means in the actual sum that we are going to do, should you do this computation again? No need. Should you do minority computation again like this? No need. This table you can write minority is equal to 28,000. Working note reference 3A. Are you following, guys? How did 3A come? Computation of Total pre and post. How did pre and post come? Step 3. That's why I told if step 3 is wrong, full sum gone. Because step 3 leads to my values in 3a. 3a leads to everything else. Are you following, guys? Okay. So, sir, but can I do this again, sir? I want to do this again for cross checking. Yes, if you have 4 hours sprints, you can do it in the exam. No problem. I don't have any issue. Done. Are you following, guys? Next. Step number 5 is over. How much you got capital reserve? Sir, goodwill 20. Now step number 6. So follow very carefully. What is step number 6, sir? Reserves and surplus for holding companies, consolidate financial statements. Look at your steps. I dictated the steps. Look at that. Particulars. Go to your steps. Go to your steps. What you wrote in notes in the concept note. What was the first item? No, reserves and surplus of holding. What is the first item I gave you in notes, sir? Reserves of holding. Not only I dictated. See, correct. See your notes, guys. Today, if I go back to the steps, somewhere I have to scroll up, guys. That's why I asked you. Where is that? Computation of this one. First is reserves of holding. In our example, what is reserves of holding in the question? How much, guys? 50,000, correct? So I will write 50,000 plus post acquisition reserves of subsidiary. That means what I earned, come down here, what I earned over here the last 9 months. Did I compute already? Did I compute already, guys? Yes. Where is it? 7,500. Is it there in my table? Yes. So total post is 7,500, but what belongs to me is only 6. So come to my table and take 6. Are you following? See, total post is 7,500, but in that mine is only 6,000. So you will come to your final working note. You will write down HS profit and loss. How much, guys? 50,000 plus post acquisition. What did I give you? Post acquisition share of H limited. How much, guys? 6,000. This came from which step? Step 3A. The total of this is 56,000. We don't have any other adjustment in this sum. Are you understanding this? Everybody got this? Now go to your magic table. What is magic table? 3A. Take again pencil. Circle this 6,000. Draw a line outside. This goes to which step? Step 6. Are you following, guys? Sumaya, not getting it? Correct. Okay. Of post acquisition share of subsidiary limited 6,000. Are you following, guys? You got 56,000. Basically, the English is my share of subsidiaries post acquisition profits. Now, if you come to this table, all the values are used. Guys, look at this. This minority column is going to step number 4. This holding company share capital and pre is going to step 5. This 6,000 is going to step 6. So this 3A will determine your values in step 4, step 5, step 6. Are you following? Now we don't have intercompany adjustments in this sum. So we will skip that step. Straight away go and prepare the balance sheet. CFS, let me do it in T format just for you to gain the control, guys. Okay. Now you have to fill these values. Correct? I will write whatever is here. You try to fill it once, guys. Please look at the question and try to fill it once. Look at the question and try to fill it. Everybody has the question with you. Fill the values. See if the balance sheet is tallying for you. Give it a try once. Give it a try. Give it a try, guys. Fill the values. Just fill all the values. Look at the question. Line by line addition. Just fill it. See if it's tallying for you guys. If you get this correct, you are on the right track. Of course, first sum asking you to do by yourself is not fair on my part. I will do it, but I just want you to try and see how many of you are getting it. Balance sheet tally, it means put your hand up. Recording students, I will update from here. That's it. After this, we can keep doing sums in quick speed. Sumaya tallied. Question is there with you guys also, but I will just show the question. You don't need the, I mean, you need the question if you don't have it. No worries. Yeah. Line by addition, just write the values, guys. Tallied 1, 2, two of them tallied here, guys. Online live, Kalyan has tallied, 3 of them are tallied, very good. 4, 5, Rahul has tallied, good. Okay, now come here, let me do it quickly. Look at the template. PPE is 1 lakh plus 1 lakh 30. So I will write PPE as 1 lakh 30. Investments, what you will write? 2 lakh 30, sorry, 2 lakh 30, 1 lakh plus 1 lakh 30. Then investments, what I will write? 0. Investments only, I am doing all the working notes. Step number 5, cost of control, correct? Current assets, 74 plus 70, how much? 1 lakh 44,000. Anything else on the asset side? No. If anything else is there from question, no. But you have goodwill as per step 5. How much, guys? Goodwill 20,000. So your total will be 3 lakh 94,000. Come to the liability side. Trade payables 1 lakh plus 60, 1 lakh 60,000. Next, you don't have to panic itself, guys. Reserves and surplus, previous working note. How much? 56,000. Copy paste. Share capital only holding. How much? 1 lakh. Sorry, 1 lakh 50,000. 1 lakh 50,000 only holding. What is pending? Minority interest also will come. Because I am reducing my share over here in share capital and reserves, that 20% minority, which is step number 4. How much? 28,000. Now the balance sheet will comfortably tally. Are you following, guys? How many of you, check your neighbor's note, wrote share capital 1 lakh, 2 lakh 50. Check neighbors, anybody? Anybody 2 lakh 50? They striked and wrote. Check neighbors, anybody? Hello, online, anybody wrote like that? Guys, come on, guys, I will share the profit with you. Come on. Anybody got that, guys? Following, guys, everybody. Let's check the answer. What's the balance sheet total? You got 3 lakh. That's the answer. That's there over here. That's it. Consolidation is done, subject to 2-3 small adjustments. Are you following, guys? Last class 2-3 hours, now some 2 hours is for you to get the answer. Now the steps, is it useful, guys? Now steps I don't want you to memorize. Are you understanding logic? For that logic only I spent so much time. With this, now we can proceed to do next set of sums. Let's see if you can do the next sum now. Yes, we can do it. Illustration 12. This sum is for practice. What are you learning new? Nothing new in this sum. It's just practice in schedule 3. How long should we take for this sum? 10 minutes is a crime, guys. 10 minutes is a crime. Now, from the following balance sheet, prepare consolidated financial statement of Virat and Anushka Limited. I didn't give the name. ICA gave the name, guys. Virat holds 80% of equity shares in Anushka. Then who's holding 20%? Minority. Who is that minority? Rahul. Okay. From the balance sheet, Virat and Anushka is given. They have given the values, guys. Who is the holding? Virat. Here also discrimination. Why can't Anushka be holding? Look how I say the person who typed, he gave Virat holding. Why can't Anushka? I don't know. I don't understand why they did like this. Share capital 6 lakhs. Look at the values. Fairly known. Here also fairly known. They have given some notes to accounts. All the values are given. Nothing great. You pause, read the question. Consolidate. Oh, solution is there down. Okay. You have to prepare consolidated balance sheet as of 31st March 2021. Who's going to solve? You are going to solve, and you are going to improve your confidence with this sum of Virat and Anushka. I will guide you. I will guide you. Those who are watching online, even if you turn the video off, it's okay. Now, this is a chapter where I'm going to train you to do it by yourself. Just listen to me. Go with the steps. Whichever step I have to do, I will do it. So, you can even turn the video off recording. Look at your notebook. Listen to me and write. Take a moment. You read the question once if you want. Recording students, you can pause and read. Okay. I'll give you 30 seconds. Just read the question once and then do step 1. What is step 1? Date of acquisition, date of consolidation. Step 2, percentage of holding and minority. So read the question for about 30 seconds. Do step 1 and step 2. I will discuss step 3 next. Don't look at the answer. I know the answer is available with everybody. Just do step 1 and step 2. Date of acquisition, date of consolidation. Last sum, guys. This sum will either make you or break your confidence in consolidation, guys. Easy. You should be able to do it. I will promise help where there is a need. Okay, what is date of consolidation? 31st March. Which year? They have not given. Oh, they have given 2021. What is date of acquisition? From incorporation. Since. That means when Anushka Limited was born, from that time Virat Kohli was holding. Yeah, don't take in double meaning, guys. Okay. I am trying to say in the question, Virat Limited is the holding of Anushka since incorporation. That means Virat Limited only what made Anushka Limited. Okay. Following. Now, follow, guys. Hey, question I'm saying. Hey, what is this? You guys are interpreting in different way. So, date of acquisition, colon, from date of incorporation. Following, guys, write down. Ashwin is feeling bad, your name is not there. Done, guys. So, step 1 is over. What is step 2? Percentage. Sir, they gave in the question, so what? Write down. They gave 80%. Thankfully, other sums you have to compute. So, percentage, write the step 2. Don't look at my face, write in your notebook. Percentage. Virat, 80%. Minority, 20%. You can use the term minority interest. Minority interest is 20%. Virat is 80%. Are you following, guys? Next step is step 3, analysis of reserves. That's where I am going to come and help you out. Look at the reserves. With me, we will do it together, but I want you to do it one step ahead of me. Which reserves should I analyze? Virata, Anushka? Anushka. So, Anushka says 1 lakh. What is the breakup of 1 lakh? Come to notes. We have only, thankfully, last sum only 1 reserve, now also 1 reserve. So, I will write here reserves. General reserve is 1 lakh. Tell me how much is pre, how much is post. Pre, post. Fill it, guys. If you know the answer, if you are confident of your answer, fill the values. Pre, how much, guys? 0 because I'm holding from the date of incorporation. What profit on date of incorporation? 0. So full 1 lakh is post. Are you following up? So question will not tell directly, hey, this is the date. It will give subtle hints. You have to pick it up from there. This is step number 3. Unlike previous sum, sir, split in time ratio, nothing in this sum. Fully post. Now I have to prepare my magic table. Step 3A. This magic table only is not there in study mat, guys. That means for each step they are doing separate working. We are doing one table for everything. Okay. Particulars, total, Virat, minority, interest, 1, 2, 3. One is share capital. Share capital of Anushka is how much, guys? 4 lakhs. In this 4 lakhs, how much is Virat? 3 lakh 20. Therefore, minority is 80,000. Total pre. How much is total pre? 0. You don't have to write in exam, but I'm just showing you because you know the table like this. Total post. How much? 1 lakh. Beautiful, guys. Virat is 80,000. 20 is minority. Are you able to do this table, guys? Okay. This is where I'm helping you, guys. I'm sure you would have done it without my help also. Now you will tell me which value goes where. Last sum you were clueless when I first wrote. Now you should be in your fingertips. This 1 lakh will go to step 4, minority interest. This 3 lakh 20 will go to step 5, computation of cost of control or goodwill or capital reserve. This 80,000 will go to step 6 for reserves and surplus of holding limited, which we will add. Correct? Every value goes to a place. See, in the main exam, you don't have to put that arrow and write step 4, step 5, step 6. We are doing it in notebook so you understand. Main exam, don't draw 3 lines. Exam I won't understand. There you can just give working note cross reference. That's it. You don't even have to call it steps. Working note 1, 2, 3, 4, 5. That is your wish. Okay. Then following, guys. Next step 4, computation of cost of control or minority interest. You are right. Computation of minority interest. How much, guys? 1 lakh. That's it. If you want to cross check your answer, what is the share capital of? Share capital plus reserves and surplus into 20%. What is share capital? 4 lakhs. Reserves is 1 lakh. 5 lakhs into 20% is how much, guys? 1 lakh. You are getting the same 1 lakh. Just if you want to cross check, guys. Are you understanding? See, don't use a step in every sum. Sometimes a question will be 2-mark question. Compute minority interest. For that, you don't have to do full pre, post and all. Straight away you can apply logic and apply into this. Because what belongs to minority is 20% of the company, which is nothing but net assets. Sometimes they will not give share capital and reserves. How to compute? Net assets. This is nothing but net assets, which is asset minus liability. Done, guys. Next, step 5. Quickly, guys. I told you 10 minutes only. Step 5. Goodwill or capital reserve. Can you do it, guys? Can you do it? I will cross check once you do it fast. Everyone do it. What you paid against what you got. Exam, don't write that. Exam, write the equation I gave. That's what answer is. I don't know. You have to wait. Just hold on, those who are watching recording. Those who are watching a recording today alone, some loose contact. For this video, please adjust. Okay. Step 5, you compute goodwill capital reserve, guys. What you paid? Question says investments is given in the question. You invested for, look at this, 3 lakh 20. How do you know that's the investment? Come down to notes. Stars in Anushka. So what I paid is 3 lakh 20 versus what I got. You have it in the table above, which is how much? 3 lakh 20,000. In other words, there is no goodwill or capital reserve. How many of you got 0? How many of you got some answer? So this sum what you paid against what you got is the same. Remember, so many examples we didn't get goodwill capital reserve, so nothing to be done. Sir, I want to compute here itself, sir, instead of using the magic table. How to compute? Share capital plus pre into 80%. Share capital is 4 lakhs, pre is 0 into 80%. Are you following, guys? Which is nothing but net assets of the subsidiary on the date of acquisition. Are you following, guys? 0. Next step is 6, which is my reserves and surplus. What is my reserves and surplus? First, the reserves and surplus of holding. How much is that? Given in the question. Copy paste. 1 lakh plus post acquisition of subsidiary, correct? My share, H limited share, H share of post acquisition of subsidiary. How much, guys? Table we have how much? See, total post this one, in that my share is 80. The table itself has the magical answer 80,000. Total is 1 lakh 80. Where will this go, guys? Balance sheet. This goes to my balance sheet under reserves and surplus. Are you following, guys? See, if there are others, we will add others. So far we don't have. Just remember, others can come. All of you getting this? Are you able to do this by yourself? Hello? Then what are you waiting for? Next is what? Prepare consolidated balance sheet. Go and prepare, guys. Prepare it fast. Tally it, guys. Tally it. I will also prepare it. Balance sheet. Particulars and amount. Schedule 3 guys. Enough of T format. T format is for first 2 sums. Anybody started T format? Take a red pen and strike their note, guys. Schedule 3. From now, schedule 3, guys. See, previous question was in T format, so I allowed T format. In this Virat and Anushka, is there in what format? Schedule 3. Sir, I don't know schedule 3. Question itself format is there. You copy that, change the numbers. That's it. I will write the answer in the question itself. But you prepare it, guys. Prepare it. I will make another new column and I will write for my convenience. But you prepare in schedule 3, guys. Prepare it soon and I want it to tally. If it's not tallying, we will figure out what mistake you could have made. It's okay. It's okay to make mistakes. Kalyan finished it. Those who are done, put the hand up. I am going to tell those who are done. If hand is not up, strike their note, guys. 2 students are already finished, guys. Others, come on, guys. On those who are watching recording, sir will do. I will copy. Hold on, sorry. Something has gone wrong today with. Recording students will have fun with the kind of changes that's happening to video today, but focus on the sum, do the balance sheet. Then who all finished? Tallied. Half the class here has finished, guys. Others, let me start doing it in the balance sheet over here. Let me finish asset side. Generally, asset sides in consolidation is a little easier. Here, PP is 7 lakhs. This will be 0. This will not come. Inventory, add both. 3 lakh. 60. Trade receivable, add both. 2 lakh 20. Cash, add both. 1 lakh. What's the balance sheet total, guys? 13 lakh 80,000. Go to share capital side. Share capital, add both and write how much? 6 lakh. How many of you wrote 10 lakhs? 6 plus 4, 10. Check the neighbors, guys. Anybody wrote 10? Today you will not write, I promise, but yes, Vishnu wrote 10. Subsequent classes, I will definitely earn my money back. Okay. Reserves and surplus. Can I do 1 lakh plus 1 lakh? No. You previous working note, how much? We got here 1 lakh 80,000. Minority interest we got 1 lakh, correct? Then long term borrowing, just like addition, 2 lakh plus 1 lakh, 3 lakhs. Sorry guys, some loose contact today. Just today I'll just. Yeah, so trade payables 2 lakh plus 1 lakh, long term borrowing 3 lakhs. Then trade payables 1 lakh plus 1 lakh, 2 lakhs, total is 13 lakh 80,000. Is it tallying for everybody? Not getting. 13 lakh 80,000. Basically, I added everything except this. Are you getting it next to Pavitra? Sure, she got her. No. Got it. First row, Anjana got it. So check the answer, guys. 13 lakh 80,000. Our minority will also be. What was our minority, guys? 1 lakh. Cross check. That's it. If you look at the workings, they will do it same thing, but see basic information. First, you have to write who is holding, who is subsidiary, date of consolidation. If acquisition is that, date of acquisition should come. Then analysis of reserves. Same way they have done, but we are doing it in a much simpler way. Working notes doesn't matter. Okay. Following, guys. How many of you understanding? Clear? Consolidation easy or difficult so far? So now we will do some more sums. Okay. Now recording students can watch the next video. So far, do you guys have any doubts? So with this, I will end this video and do the next one in the next video for recording.